Welcome to another episode of the Dojo Pod. Look who's back. We got Mara back with us after his short leave. How you doing, man?
I'm good. It's been 2 weeks, but it feels like in DeFi terms, I was away for like half a year. So, I feel like there's a lot to learn. I'm interested to hear about all the interesting happenings in the world of crypto and DeFi. I understand World Liberty Financial dropped yesterday. I was kind of peeking in on that.
As in the price went way down, or dropped as in went live, or both?
Well, but both. It's funny because I know a bunch of people who invested in it during, I can't remember what it was called, like when you could invest in it early. And so like they all made a killing, right? Like I think that, so they only got 20% of their total allocation, but that, 20%, like I think their overall allocation is like, like 10x or something like that. So they did like a 4x just on like the amount that they've gotten.
So did it launch on Solana? Is that correct?
What launched on Solana?
The token, World Liberty Financial.
I thought it launched on ETH. No?
Well, the only reason I ask this is because I know that people always copy the name and launch the meme coin on Solana, but this one looks like it is the right one because it's USD1 and World Liberty Financial. It's probably launched on both, and it's around the correct price. So 22 cents here, and then on PancakeSwap it's 22 cents. $30 million in volume,
22
pretty
cents.
substantial.
Yeah.
So
yeah, I think you're right.
Simultaneously on Solana and on EVM.
Well, at least what I'm seeing on Dex screeners, it looks like it actually launched the same time. Well, it's because I see the one on PancakeSwap was a day and 10 hours ago, and the one on Solana was a day and 1 hour ago. So, yeah, I don't know, big launch. I mean, it's super interesting to see how all this stuff has played out. Congrats to the people, I guess, who invested in this early. It was open to like everyone pretty much, so you could have gotten in early. This was like one of those pre-sale things that, when
you did have to. It was like KYC. There was some like limitation to it. It wasn't decentralized.
Oh, was there? Okay. Yeah, I didn't participate personally. Obviously, should have. Would have made a killing. I saw a bunch of screenshots of people who, invested like $15 million in this, and then now had, at least as of yesterday, like $300 million of value. So people did really well. I mean, it's obviously come down from about 30 billion to like what, 22, 21 billion now. I am fascinated to see, where this thing ends up. I think it's, it's like a top 30, maybe 50 crypto right now. I still don't fully understand like how it's all going to work and like how it all directly connects to Aave, besides knowing that Aave owns a ton of it. Oh, okay.
No, I mean, it's a good point. There's the narratives associated with like the working directly with other tokens by virtue of, they buy some of your World Liberty Financial asset, you invest in them. That gives a like positive feedback loop in terms of marketing. We've seen some kind of shady teams participate in this. We've seen some like very renowned teams participate in this. And I think like obviously they have the clout. You can't get more clout than the president of the United States. I get that he's very polarizing and some people hate him, some people love him, some people don't care about him. But in terms of powerful people, it's there aren't that many other ones. You could maybe see like Xi or Putin launching a meme coin, but they're just not in the same space. So I don't think you wouldn't. So anyways, it's in terms of marketing, you can't beat it, right? It's about as much attention as you could possibly get on a thing. So we'll see.
Yeah.
Is it more than an Aave fork now? I don't know.
Well, it's also fascinating to see just kind of like the volume on this thing, right? Like it looks like, so $30 million of volume.
Here.
Yeah.
Yeah. 11 million here on Uniswap, 20 million on PancakeSwap.
Yeah.
Yeah.
Yeah. The LPs have been doing well. I mean, it looks like just on Radium alone, something like, $100,000 in fees.
I'm not even sharing my screen. What am I doing? All right, let me share my screen. People can't see what we're talking about. So, yeah, I mean, oh, wait. How are you checking fees? Because
I'm just looking at, here, I'll send you a link right here. I'm just looking at Radium itself. Directly? Yeah. Yeah.
Yeah, that's the way to do it. That's that. we rag on Dex Screener a lot. We use it a lot too. So, high tip to them. But one thing that I wish they had was either just tell me the fee tier, like somewhere in the UI, just tell me the fee tier, because then I can do the rest of the math myself. Or show me how many fees they made in the last 24 hours, because then I can also do the math myself.
Yep. It looks like most of the fees, I mean, some people had fee tier in 4%, which is pretty funny.
I'm sure it did okay. I'm sure like some of those people made some money.
Yeah, well, I mean, a high volatility, so it kind of makes sense. But the main fee tiers seem to be in like 25 bips or 20 bips kind of thing. And those are, quoting 235% APR or 1,000% APR. So yeah, I don't know. I mean, this was another thing, like the Trump coin, the volumes were insane for a long time and people
Right.
farmed those a ton, but like, it's the constant game of, can you outpace impermanent loss? And for something
Right.
like this,
Yeah.
like that's a real,
Can
real
you earn faster than you lose? And with something with as crazy delta as, the president's, I don't know, it's not like a meme coin now. The president's governance token is that the right way to go?
Well, that sounds a bit strong, because that makes it sound almost like, you vote with your World Liberty Financial token.
Why wouldn't
and
you?
The president does.
Utility. It's a utility coin.
It's utility, but for his application, for his DeFi application,
Right? For his application,
not his just general governance token. Yeah.
No. So yeah, but like, so it's not a meme coin, and so maybe it'll have slightly less volatile price action. But yeah, I agree. 30 billion or 20 billion, whatever that is, whatever the valuation is, seems high. But we have no idea what's going to happen. We have no idea like what's cooking behind the scenes. Obviously, your what is it? What do they say? Your social group, your network is your net worth or something.
Yeah.
And so if World Liberty Financial's value is based off the value of its associated network, it could be worth that much. And it could have like staying power because after Trump, becomes king after this term and stays forever. No, but like after this term is over, if he does go out and like maybe this becomes his new focus because literally it's the largest portion of his net worth now, I could see it having some staying power. I don't know. It's all speculative. That's why we're in the industry, but it's hard for me to bet.
My guess is
market cap or FTV. That said, I've missed better plays.
Yeah, my guess is that this does have some probably more staying power than the meme coin, as you pointed out. The meme coin there was like the dinner and there was competitions and a few things, but they were a little bit ethereal in kind of like their true value. I think he's already kind of. Oh, there we go. Yep. But this thing, like it's already shown to kind of be a center of kind of his influence, like the $2 billion of USD1 that's out there, these like connections to different projects and projects buying World Liberty Financial token and, him buying their token and kind of being, a tool almost that he can flex or his people can flex. So I do think that this thing probably does end up having some level of staying power, but I also know, as I said, a bunch of people who invested in this thing early and are up so much that they're going to sell, right? These people are up hundreds of millions of dollars, not like necessarily the people I know, but like people in general are up massive amounts of money. And I think, selling will happen. And I probably think that, it's a situation where like there's going to be a lot more supply overhang than there is demand for it. Cause I don't really know who the marginal buyer for this thing is at $20 billion, $30 billion. I mean, maybe there's some people, but like, I don't know. It's a bit hard to buy into something that's already so highly valued. So I would imagine this thing grinds down. I imagine like as there's announcements and exciting news and hype and stuff that it like spikes up and then it kind of like, slogs down and then spikes up and then slogs back down. So
yeah, I mean,
I bet you this
like
ends up being
would put it at what, like top 10 asset?
Put it almost at Ethereum or something like that.
Which is why it makes it hard to buy here. Yeah. Do you know what gold is? I was looking at this and I don't know. Maybe it's a meme coin. Maybe it's not. But 66,000 in fees seems crazy.
I have no idea. I would assume
Probably
it's on
coin.
Solana and Radium. It's a meme coin, right?
Yeah, I know. That's a lot of fees. Good for them. USD1 is kind of taking over the world. We talked about USD1 a while ago in the context of why on earth is it all over Binance? And then the answer that we got from the founder of Solve was that, what was it? It was an Emirati family office it was a UAE family office, so Emirati, and they invested a lot of USD1 into Binance to become like one of the largest shareholders.
Yeah, there was like Binance and Tether both like did sales in the last couple of years, and you had all these interesting people buying stuff, like the Emiratis buying part of Binance and Besset buying part of Tether and all these different things. And so at least this transaction, from what I understood, happened in USD1. And so Binance has something like $2+ billion of USD1 that they like can't necessarily liquidate. And I think also the optics of liquidating the president's stablecoin is probably not a great one. So it's like, well, what do you do with it? You just hold it and put it to work and make it useful. Yeah. And that probably curries favor. Yeah, curries favor rather than trying to like liquidate it all into USDT or something like that, which probably, is not a great look, especially when Binance is trying to get back into the US market, right? Like Binance US kind of defunct stopped working, and there was a lot of like questions and uncertainty around it. And now there's a lot of kind of movement to try to, allow Americans to use offshore exchanges. So that would be things like Binance, Bybit, which is super interesting, like how the dynamics of a shift like that would happen, how that would affect someone like Coinbase, who kind of, has a big sway on the US market, or Kraken, or even Hyperliquid, where, a lot of Americans use it, right? If they're trying to kind of like find a non-KYC place where they can exchange and use perps and stuff like that. So it's fascinating times, definitely fascinating times. Are you setting a range? Is that what you would?
No, I mean, I was looking at the bottom and seeing how much it is up from the bottom. Only up 8% from the bottom. And if you do from the top, it is down 40%. So not amazing yet, but a nice 8% climb from where it was at 21 cents all of yesterday ago. Yeah, so not very long ago. Yeah, it's pretty cool. Well, speaking of setting ranges, I did set a range. You've been singing the praises of the JLP pool for a long time. Now, I'm not in JLP Solana, which I know actually has less delta, which is kind of crazy, than JLP USDC. I'm in JLP USDC. And I actually think if I click on this, it just shows me my ranges. Yeah, so these are I had two pools open first. These are my two different ranges. And I got lucky. My first range would have still been inbound. I ended up consolidating the two because maybe impatience. I don't know. I like moving things around. But I compared Orca and Meteora directly. So I had the exact same fee tier and the exact same range. And I kept them open for 24 hours to see like which one was better. And it was Meteora. I mean, you probably already know this. You've probably done this experiment before. But I was surprised because Orca got so much volume. But it really is the case that anytime there's a larger than normal swap, you just get a little bit more juice because of that dynamic fee tier, and that makes a meaningful difference.
Yeah. That's been my experience too. Whenever I talk about this, people kind of always push me in the direction of Orca, and they say, look at the fee, look at the, not the fees.
Right, look at the volume, look at the fees.
The volume. Yeah. And my experience is, one, Meteor is the best place to do concentrated liquidity just because of like how good their system is. The user experience is good. Just like the ability to have different kind of like buckets is really good. So I really like Meteor, first of all, just as like a place to LP. And then second of all, the dynamic fee makes a massive difference. Like when there's a big spike in volatility, a couple weeks ago, there was a big spike in volatility, and I made an insane ROI on this. At first I thought it was like 25% ROI. I think it actually ended up being like 11.5% when I did the math properly. But 11.5% ROI on a position like this in a week is insane. What have you been finding kind of like your APR to be?
So I've been averaging around 70%, which is okay. Obviously I would love to have like 150% or 300%. And I was getting around 250 when I had a really so if I look back at that range that I had when I was in this yellow to yellow range, I was getting around 150 to 200%. But I knew it was too tight. I knew it was unreasonable. And so when it went really high, I said, I'm just going to exit, get my impermanent gain, and then reassess. And so now my range isn't quite as wide as the orange. I think my range is like plus or minus 5 or 6%. I lost it. Here it is. So let's see, 5.2 to 5.7. Yeah, 5.2 to 5.7. So 5.2. I take this, put it here, and then 5.7 there, and I can get rid of these. So this is my range, and at this range, I'm getting around 75%. Now, I don't know. I think it's more likely to go under than it is to go over, but if it goes over, I'll be happy to exit into, I don't know, maybe 5 or 7 to even 10% gain, like permanent gain there. If it goes down, my thinking is, if you have a long enough time horizon on JLP, what you can do is take all the JLP you ended up with and put it on something like Kamino. And so what I did the first time it went down, when it went down, I think it went down as far as like $5.18. I exited my position. I took a portion of that JLP. I put it on Kamino. I borrowed USDC against it. So I have USDC to put back another LP. And then I re-LP'd as it went up. And because I never sold any JLP, my JLP increased in value. I was able to close that loop. It was a really complicated play, but it ended up working out. I wouldn't recommend
the nice thing about JLP is there's a lot you can do with it now. And so if you do ever go out of range to the downside, borrowing against it is a great option. One thing I will say, Stephen, though, is so I try to like change my position very infrequently, just also because I'm impaired against Sol. So it's a lot less volatile as well.
Yeah.
And also, like I think a 75% base rate is pretty good. The thing to remember is you make the majority of your fees on high volatility days. So if you can hit like a base level 75% APR, you'll have some days where it goes up to 300% or more,
Yep.
like 500%, insane stuff. Because for two reasons: one, liquidations in like high volatility, when the market's moving. And then two, that dynamic fee tier. So like when there is a lot of volatility, you're also just like making a ton of fees. So, if you can hit it like a 75% base rate and then on some days go up to 300, 500% APR, it's a substantial like, gain. Like you can have days, even a week, where you're making, a percent a day or multiple percent a day, which is fantastic. So
Yeah, I mean, this is a plus or minus 10% range, and it's been good since February. So 7 months, half a year.
Yeah, and I this is very close to actually what my range is. I mean, you can see there, I went out of range like a handful of times, and sometimes it's a bit scary, and you're just like, oh man, I'm out of range for like, 4 or 5 days here. But then it seems to just always kind of mean revert back into it. It's been remarkably flat in that period. So, I mean, like flat in that, like it's within that range that you're just talking about, and does just like bounce up and down between them kind of thing. So,
and as a reminder, the reason why there's less volatility for this pair than JLP USDC is because JLP is 60-ish% exposed to Solana.
Yeah.
And so it has more direct relationship to Solana, whereas in USDC terms, the chart looks pretty good. It's going up, right? But that also means that you're more likely to fall out of range more common or consistently. There we go.
Yeah, and I just sent you the stuff for JLP's been getting into lending, and it's fascinating to me because Fluid was actually the team that built out their whole borrow lend system. So it's like just seems like such a coup for Jupiter to be able to for Fluid to build the money market for Jupiter. So it's been pretty interesting to see that happen. There's some interesting stuff you can go do over there. Like,
I felt bad because the moment it launched, I got really excited because USDC was at like 45% APR. USDT was at like 38%. The euro was at 42-ish. USDG was crazy high too. And I thought, man, like everyone, you should go farm this because this is a crazy good incentive program. There's already $30 million of liquidity in USDC. There's already like $10 million in this and that. And I was not expecting $210 million to flood in and dilute those that fast. I don't think we've seen a protocol in recent history absorb that much TVL that quickly.
My understanding, and I could be wrong about this, so this is just take this with a massive grain of salt, but my understanding is that part of this massive liquidity that flowed in was the unused USDC in JLP that they're now trying to find more utility for. And so part of that is coming from there because, JLP itself is like a $1.5 billion asset. I think they have hundreds of millions of dollars of USDC just sitting around that was previously not getting anything. And so part of this borrowing, it was originally borrowing USDC against JLP, which you can now do for 4%, which is insane. I think that's a really good deal. But a large part of like all this liquidity that's sitting here, I think is from JLP and means that, like it's now more active. It means that like the JLP...
They have their own section dedicated to JLP loans?
Yes. Yeah.
Is this different than just using their money market?
I think you can get like fixed rates and stuff like that.
Yeah, it looks like it is. 5%. Max LTV is pretty okay, 83%. So if you went to 80%, you'd be at 5x leverage. Don't 5x leverage JLP. You get burnt that way. If you borrow on here, JLP USDC, it's 4.2. So yeah, this looks more volatile. The other one looks more fixed.
Yeah, there's something about it like that. I think that is the reason, it's like more favorable to do it there. But yeah, it's fascinating to see Jupiter kind of getting into all these different games. They do really have one of the few pristine crypto assets, which is JLP. Like it's been, super consistent up into the right chart. It's like one of the kind of most consistent assets out there. And to be fair, if people go back and like look at early podcasts, I was poo-pooing it for a very long time, but just counterparty vaults in general.
User now. I mean, you've been farming this
for a long time.
Podcast.
Yeah.
You've been in it for like over a year. Have we been podcasting for that long?
I think we've been podcasting for that long. There was a long time where I was poo-pooing this. I think, the original, like the GMX version of this, I got burnt on that. And so like, I went from being like, into GLP and then got burnt on it. And then it was like, this is going to have a similar fate. And then so far it hasn't. So knock on wood, but I've been a very large user of JLP for an extended period of time, and it's definitely been one of my this LP, the like JLP Sol position, has been one of my best performing positions.
Yeah, you've like over doubled your principal both in Solana terms and in JLP terms.
Yeah,
which is nuts. One of the things that I want to mention here is that Solana needs more yield-bearing stablecoins. If you look at this entire list, there's only Syrup USDC in terms of yield-bearing stables. You go anywhere else in EVM world, you're going to see a bunch of yield-bearing stables on, like even Aave has Athena USD, they have USD, they have USDS from Sky. They have a bunch of them, right? Here you like the only, and it's not even native to Solana, which is, anyways, Syrup USD is good though. At 88%, what is that? 8x leverage around there. It does okay, right? 7% versus a 2.7%. I can do the math quickly. By the way, guys, if you want the math formula for leverage, it's just 1 divided by, and then parentheses 1 minus the max LTV, so 0.88. Yeah, so 8.3x leverage. You take that, you multiply it by the yield, 6.9, you get 57%, and then you subtract leverage minus 1, so 7.33 times the borrow cost, 2.7, and you get 37%. So this is a 37% loop. And there's no emissions aside from dollars. So either you're getting paid in Syrup USDC because your collateral is increasing in Syrup USDC, or you're getting paid in USDC literally to borrow on the borrow side. And even if the 4.2 organic borrow cost APR, it's still a positive loop. So I like this. Now, some people were saying that if you like use the auto leverage feature, the multiply feature, that you could get burnt, that like some things could be unfavorable. So just keep that in mind. I tend to recommend not doing that.
I was just looking at the liquidity for this on Solana. I was just assuming this liquidity is poor because Solana stablecoin liquidity tends to be poor. I just sent you a link to the deck screener on it. There's $31 million of liquidity. Pretty good. I mean, I guess there is $75,000 of, collateral sitting on Jupiter Lend, and there'd be more on Kamino and stuff. So, there's probably well over $100 million of TVL looped up, but $30 million in concentrated liquidity on Orca is not bad at all. So yeah, I don't know. It's pretty interesting.
For Syrup USDC?
Yes. Yeah,
I was looking at that, and I was like, the APRs are so low. I think it must be that either Syrup is providing it, or Maple is providing it, or like it has to be protocol owned. It can't be organic.
Yeah, I think so. Or there's I wonder if there's like some incentive program that's happening, or it's like SLPs or something like that are providing it.
Yeah.
But definitely fascinating to see.
So anyways, go check out Jupiter. I didn't realize that Jupiter Lend was built by Fluid. It's a Fluid instance. Is that the right phrasing there? Solana?
Well, they had to rebuild it all because like Fluid was an EVM product, and so they rebuilt Fluid to be on Solana. So if it's an instance or if it's just like a new product or something like that, I don't know exactly how they qualify that, but it's great to see Fluid making big moves, right? I mean, like they've kind of been doing a lot on the EVM side, kind of growing market share over there, and then now to just like make this big move and partner with kind of like the king of Solana, which is Jupiter, is fascinating to see.
Yes. I was trying to see if there's any like additional fee here.
Someone was saying there's like a sneaky little fee that you get.
Well, they were saying that they thought it was being routed through Jupiter Ultra, which has a higher fee than just regular Jupiter. And then DeFi Made here, who is part of the Fluid team, was like, no, it doesn't route through that. And so maybe the fee's not there. Maybe it is there. We know a few people who actually leveraged this up, and like their own slippage or price impact was small enough to be covered at 40% APR in 2 to 2.5 days. So that's actually pretty good. You're in for a week, you've already ROI'd. Now even your exit costs are fully covered. Everything else after that is profit. That's pretty good. But yeah, I don't see anything here that would indicate what those fees might be. For those wondering, Oracle. Oracle is fundamental. So NAV, you're not going to get liquidated through market variation. Love to see that.
I just sent you the Orca pool for this. And so, yeah, as we said, $31.5 million of TVL. It is a 1 BIP fee tier. So with $2.8 million of volume, that's like $290 of fees. So
Yes, no, it's zero APR, approximately zero.
yeah, very, very poor. I wonder, I mean, and you can also kind of, the interesting thing also is you can see where the liquidity is sitting, and it is very tight. It's approximately sitting between, yeah, I mean, it's very, very tight. Like it looks like a market maker's doing this, I think. If you go like on that right-hand side where you can see the custom liquidity distribution there, it's a really small box, so it's, not worth highlighting too much, but like right there, yeah. Oh, I guess you can zoom in a little bit, but still, I mean, that looks like market maker liquidity, which kind of makes me feel better. Like you're always worried about like, are you going to get liquidated by, something like this? But I guess since it's fundamental, you can. And then like, are you going to be able to exit it and like have dependable liquidity getting in and out?
Well, what Maple was saying is that they're eventually going to have mint and redeem on chain, which probably makes sense because I imagine they're paying money for this service, for this market making. And so
right.
If you have native minting and redeeming, then you don't have to pay for the market making because you don't need as much liquidity there. So yeah, we'll see.
What do you think about Kamino? Like, how do you see this affecting Kamino? Do you think Kamino is still
That's a great question.
Or
I can tell you what I hope happens because I like the Kamino team, and I saw Marius getting into a fight with Sam or Samayak on X recently, and I like both those guys. So that was kind of I don't want to say heartbreaking, right? Worst fates have befallen man, but to see those two guys like bumping heads was annoying because I want both of them to win. I really hope that Juplend success means more competitive LTVs on Kamino. From my perspective, like the LTVs on Kamino have always been way too conservative, and then also more exotic collaterals. I think no one. What they said, there's one protocol that I can't remember the name of that does kind of exotic collateral on Solana, but they also got exploited. Do you remember who this was?
The people that
were using PTs.
Yeah, they're using Exponent PTs or something. Or
and it wasn't Exponent's fault, as far as I know. It was their own underlying mechanism. Anyways, I still want to see more exotic collateral. Like, don't listen to the exploit part. And I think Kamino is well positioned to do that. They have a curator model already. The curator model has proven success on EVM. It's proven success, I think, to a large extent on SVM. They have a lot of liquidity there. They already have a token, so they can use that for incentives in a meaningful way. But they need to do something to stay competitive. And I think it's higher LTVs. It's adding more collaterals, especially yield-bearing stables, because that's the narrative that Solana is sorely lacking. The only one they really have is, like we said, Syrup USDC. But, also give some love to some of the native yield-bearing stables. Carrot, right, is a yield-bearing stablecoin. What's the FFX fork? Hilo?
Yeah,
Hilo is a Solana native yield-bearing stable that we're not really seeing on any of these major money markets. There's a couple other ones. You remember that one that was like cash payments?
Yeah.
Whatever that one was. It was like purple. It looked like the Wu-Tang Clan symbol. That was another one. There was then now like coming out Solstice, right? Solstice is probably going to be huge. I imagine it's going to be really big on Solana. It's like the Athena of Solana. They say they've gotten like 20%. Oh my gosh. Okay, so it was 19% last time we looked. This must be dynamically updated. Now it's 21.5%. That would be crazy for funding or arbitrage. But I think it's going to be big. But like things like this, right? You need more yield-bearing stables on your blockchain. It's mind-blowing to me that they haven't realized this yet. I don't think it's Kamino's fault. I think it's Solana as an entire ecosystem just hasn't really considered this, and I don't know why. All you have to do is like look at your neighbor EVM and see where is all the TVL going, and all of it's going into looping and leveraging, RWAs and yield-bearing stables with the occasional like Ether BTC play and virtually no real love for governance assets. Whereas on Solana, I don't know. What do you think? I know the meme coin stuff, right? That's kind of like the narrative. But aside from that, what does it feel like Solana's been focusing on that maybe I'm just not understanding?
Well, first of all, I do want to point out for Kamino's sake that their LTVs for Syrup USDC, I think, are actually higher. It's 88%, which, and with liquidation LTV of 90, which is not, in EVM sense is not super high, but I think is a little bit higher than Jupiter Lend. So they are changing. Isn't it? Let me see.
88.
Oh, so it's exactly the same. Never mind. I think I was looking at the JLP ones. So yeah, they're matching themselves blow to blow with that. But yeah, I think we're going to see this, like, I keep on hearing about this, like, big influx of, like, institutions that are doing something, yield bearing stables, or, like things that are happening on Solana. I haven't seen a lot of it kind of like in practice yet. I think that like, the meme coin mania kind of stole the oxygen out of that ecosystem for a while, and it's going to take some time for them to build up kind of more fundamentally interesting things. And, I know, hats off to Patrick Dynamo DeFi, who was a regular guest on this show, in yesteryear. And me and him would kind of like go tit for tat on the ETH Solana thing. And, the point that I was always making was like, like, yes, there's a lot of activity. Yes, you can point at like DEX volumes. Yes, there's like all these things you can say Solana is crushing it with, but it felt a bit like a straw man. It felt like things that like clearly were sucking money and oxygen out of their ecosystem and not kind of like long-term building it up. And I think, ETH might be slow, and ETH it definitely has its own problems, but it does feel like there's this constant push and constant, piece of like building DeFi that is interconnected, that is useful, that is not just like a negative sum game. And I think, Solana has gotten a little bit high on its own drugs. And I think, it needs to have, stuff like Solstice. I think Solstice is one of the most exciting things that's coming out of Solana recently. And I think there will be more, right? We saw all those like tokenized stocks. That was like one thing. I'm not sure if that's kind of like continued to be exciting, but more and more stuff like that, I think, will be good. Oh, what is this tweet here?
But Patrick, and we love Patrick. He has been posting that he's going to crash out, I don't know, once every other week for a while now. I hope that whatever he does, he becomes wildly successful, and he's a very, very intelligent guy. But it's just like he posts this semi-frequently, and I had to just point it out. So if anyone out there has a great job for Patrick, I mean, he works with DeFi Llama, so he's already got a really cool job. Actually, total aside from him crashing out, go check out, he did a really good thread on dashboards recently, which was because like DeFi Llama allows you to like build your own dashboards, and I think it's free. Maybe it's not free, but like he showed some of the best dashboards that have been built. Yeah, here's a thread of dashboards that he has made through DeFi Llama. And I don't know, it's actually pretty impressive. It's a very intuitive tool, and I'm kind of mad at Dune right now because Dune blocked me. I mean, of all the websites in the world to block my IP, I have no idea why Dune did. They're like, you're suspicious. And I'm like, it's a data dashboard website. What are you doing? So yeah, go check that out. Sorry, that was a weird sidetrack.
No, it's good. Well, so I've been away for a couple weeks, Stephen. What have I missed? What are the interesting happenings in the world of yields?
Well, I mean, obviously we should talk about Gearbox lending, because I don't know like how they're getting all of these incentives, but they are. And so we saw Euler sort of run this playbook where Euler was able to use some sort of clout to attract a bunch of incentives from new partners, and maybe it's the curators are able to do this. But 46% in USDC incentives for anyone willing to go to Hemi. I've talked about this for a few weeks now. There has been roughly 150 200k USDC supplied here for a month. It's like no one is willing to try to learn how to use Hemi to go over there and farm these USDC incentives. But if you do, it's 46% in USDC going on for another 14 days. So 2 weeks. USDT K3, that's organic. That's not incentives. That's just from borrow costs. I would anticipate this to shift and change. The supply is very low, 40k. But the ones like this one, the Etherlink, these are actual Etherlink incentives in Apple XTZ, which is the Apple something campaign XTZ, which is basically just like you're farming XTZ that won't be liquid until the campaign is over. So it's kind of weird, but it is you could hedge it if you wanted to. So that's kind of cool. And that's 25%. Then the other one, which is like the USDC by Invariant Group, which is providing liquidity for all of the Falcon pools or Falcon leveraging, is 11%. So those have been pretty good. If you want to leverage, which we have a competition right now going on in the DeFi Dojo, and I might be leveraging one of these. I'm not going to say which one to be competitive. And it still looks pretty good right now. So I won't say anything, but hopefully it continues to stay good. So don't leverage, because then my borrow rate will change. But that's been pretty cool stuff. The other thing that came out with Gearbox, if you guys didn't know, was that they are moving towards this tech that allows you to leverage and unleverage through the staking contract rather than through liquidity. This is huge. If this can get implemented for things that have like a 5-day on staking period, we can just say, I want to deleverage my whole position and I'm willing to wait the 5 days on staking as long as I don't swap, which anyone in their right mind would be willing to do. It would be huge, because instead of trying to unstake, if you're for like 10x leverage, you have to unloop, 20 loops. So imagine 20 times of unstaking at 5 days. It's 100 days. So being able to do a one set of 5 to unleverage your entire collateral or unstake your entire collateral is to me, like, it's like a 0 to 1 improvement. But anyways, that's like besides the point. I was also looking at Avant recently, only because of the yield. Now, actually, let me ask you your perspective on this, because I've been crapping on Avant. Not really crapping on them. I like Avant, but my hesitance to Avant has been that they're a bit of a gray box. So they have this really nice 18% senior tranche yield, this remarkable 36% junior tranche yield. But if you click on metrics, you can't see what they're doing. There's no visibility on what they're actually doing.
Yeah, I have mixed feelings. I think in the world of TradFi, it's like, this would be super normal. This would probably be like,
right,
you just have like an attestation and everyone would be like, oh, great, this is fine. In the world of DeFi, I think we've been conditioned to want to have very transparent dashboards and know exactly what's going on. And I think that's a good thing. And I think all protocols should kind of be moving in that direction. So yeah, I hope that Avant like improves their dashboards and is more transparent. I also think that like there is probably a segment of the market that will develop for people that like want part of this gray box, where they like can build, buy into a name, buy into like, this being a good thing. And then, know that like part of this comes with edge, right? Like part of the reason they can offer such high APRs is because there is edge that is being had here. And if they just made this completely transparent, that it would, be a lower APR because people would come in and dilute it. So I have mixed feelings. I hope that they can find a like more transparent way of doing it, especially as they're kind of growing, because I personally would feel a bit uncomfortable depositing into it. But at the same time, I don't want to like poo-poo them too much, because I can also, really understand in some ways why they might want to be doing this. So it just comes down to a judgment call.
Like 7.6% on Bitcoin. That's unheard of.
Yeah, it comes down to a trust game. If you trust them, then
is that
great.
Because of edge, or is that because of Ponzi-nomics? And like they don't even have attestations. Maybe they do, but if I look on metrics, I don't see anything that says they have attestations.
Yeah.
So like,
comes down to a trust game.
To Noon. Like Noon does have attestations. They have Accountable. And you know what? I'll go on a limb. I like Accountable. I think if you're going to get attestations, get one that's not owned by you, not pointing any elbows anywhere. But like Accountable is actually, who else? Accountable works for a few of these stablecoins now. And I like that because they do real-time attestations. So like verification level, live. Like sure, you're like, okay, I can't see the wallets. I can't see what's there. But you can see where the chains are, where the money's on the chain. You can see what the strategies are. And then you have a, live accountability through Accountable. It's still a gray box, but it's a way more transparent gray box. It's like a foggy cube rather than a, solid gray.
Yeah. No, this is a great like workaround for that. So I would encourage Avant to go and do something like this so people don't have to trust. They can also have verification as well. So
right.
I think,
if Avant doesn't have edge, like maybe they're doing OTC basis, which is something that we've been talking a lot about because we have protocols like Neutral who are going to launch with the OTC basis being their narrative, right? Like even though Neutral is only 20% exposed to the OTC basis trade, that's a portion of your portfolio that you don't want anyone else seeing because you don't want people knowing, one, who you're buying these discounted tokens from. You don't want them to know like what discount you got it at. You don't want them to know like what potentially your liquidation levels are because you're probably hedging those to some extent. You should be hedging those all the time. And so I kind of understand why Falcon, which was also doing OTC basis, didn't want to show their books because it looks bad, right? Because you're probably holding some top 100 market cap meme coins on your books and hedging those to make a profit.
Yeah, no, it makes sense. It just comes down to like one, users understanding what they're getting themselves into, and unfortunately, like it is so complicated. There are so many stables. They're all just these like nuances of what differentiates them. So, in a perfect world where people would actually do their own research, I think it's probably fine. But in a world where that's not the case, it just comes down to you have to trust the team and you have to trust their system. And that's a scary proposition in DeFi when there have been so many. Exactly right. Yeah.
Yeah. but I still like neutral. So I still hope that they win. It's just like, exactly what you said. There's going to be different strokes for different folks. You and I come from the era where anything sufficiently gray or opaque has blown up almost without fail. Now, maybe moving towards the future, we're going to see less of that. And I think attestations are definitely a step in the right direction. So yeah, we'll see. It's, everything is changing and I'm still excited. So you were asking what else is going on. Oh man, a bunch of things. What do I want to look at though? That's the question. We're almost out of time and I want to look at some stuff. So let me just rapid fire through some of my tabs. You and I were talking before this call about Venuals. Venuals is apparently built on Hyperbeat and it's like a stock perp trading market. So you can trade OpenAI, SpaceX, Kraken, Enderil. I should probably know what that is, but I don't. Cluely, Cursor, Stripe. And you can participate in the counterparty to these trades by being in VLP, which maybe only exists on Hyperbeat. And the reason why we found this was because on Pendle, they show it. So Pendle was showing wrapped VLP. It has an implied yield of 17%, which is pretty cool. You can go in there and get like a fixed date, or you can bet on the yield if you'd like to, plus Ventual points, maybe? No Ventual points. Hyperbeat, Hyperfi, Hyperswap, Athena, Resolve, Felix, and Hyperblend, but no Ventual points. So maybe Ventual doesn't have their own points. I don't know. Things like that are interesting to look at because they're things we haven't really seen before. So like these perp trading for assets we've never seen, pretty cool stuff. So I also realized Mara had to drop, which is too bad. I'll show you guys a few more things. The LFJ was one thing I was looking at. I've talked about this. I've talked about why I like this. And the reason is because their APRs are genuine. Their APRs are the average APR you're actually going to get if you go in there. Or you could do better if you're in a tighter range than the average person. So that's pretty cool. The ones that I have been looking at are the ones that are like to like. There's a few good BTC ones. Let's see if I can find them. Yeah, like BTC, Wrap Bitcoin BTCB. It's 1%. No, not that one. I take it back. BTC, USDC. No, YBTC. There we go. YBTC, Wrap Bitcoin, 23%. That's really good. Liquidity, 500,000. That's not bad. Bitcoin BTCB here is 65%. What the heck is that? That's coming from AVAX incentives? Because the fees are low. Well, liquidity is also pretty low, but it's getting AVAX incentives. That's a good pool, right? I would go check that out. So, there's a lot you can look at. Asymmetry is still doing really interesting stuff as a liquidity fork. In terms of newer things, I was talking to 0x Law from Stream. Ooh, up to 18%. Let's see, 11%. Yeah, still really good for stability pool. And trying to ask them, how long are they going to stay in that under collateralized loan thing on Wombat or whatever it's called? He said they're moving out of it. So they got $150 million of TVL. And if you look at their debank, they're slowly moving out of their under collateralized loans to market makers and whatever they were doing there, and just going fully on chain, fully into DeFi. So that was, are they totally out? Have they exited? It looks like they have. Yeah. So they used to have a lot of these tokenized representatives of under collateralized loans. It looks like, for Wildcat. And now they still have $9 million of exposure. He said they're easing out of this. So that makes me feel a lot better about this protocol. So yeah, shout out to them. I think they're gonna, they should have some tailwinds coming in. So I would go check out Stream Protocol. We'll end it there. There's obviously other things we can always look at. FX is doing a campaign right now. They still have one of the best stability pools out there. You can go trade and try to earn 10K. I'm not going to win that. I'm not a good trader. But if you can win it, go ahead. And my Bitcoin position is still doing pretty well if it populates, but I think maybe I'm have the wrong wallet connected. No, I don't. Show me my Bitcoin position. I probably have to refresh. Anyways, thank you guys for watching. Go get some yield and have a wonderful, look up 23%. Have a wonderful rest of your day.